Alright, so this video, it's going to be the weekly forecast for next week. Now, starting off, let's go over to the monthly time frame. Okay. Annotate this high. ES took out the previous month's high. NQ did not. So, right here, you have SMT on highs after the monthly candles open. Okay, now let's remove this. Dropping down into the weekly time frame, you can see that we have totally disrespected this bullish weekly fair value gap. All right, so if you have watched my previous weekly forecast video, you would have known that I'm looking for reversals, but it's just that I did not anticipate that the reversals would come this soon. Okay, so working off with the previous week's analysis, right? If you take a look at the daily, and if you take a look at this down close candle here on Monday and Tuesday, right? So bear in mind, Monday is a bank holiday, so Monday and Tuesday is merged together as one daily candle, right? So going lower into the 15 minutes time frame, on Sunday, this is where we open up the weekly candle. We traded lower into about 25% of the bullish order block, and then we shifted bullish, change in the state of delivery after closing above this consecutive down close candles, and then here is your initial long opportunity into the previous week's high, which is also the previous month's high. And remember how I mentioned that once we trade above previous month's high, I want to see speed. Sorry, right here. I want to see speed above these highs, but right here, as it has shown, we did not. So on Tuesday, we closed below these two up close candles that took out the previous week's high and the previous month's high. So at this point in time, you have SMT on highs, and you have a shift in the change in the state of delivery on the daily time frame. So at the end of Tuesday, candles close right here, it was bearish, right? It's obvious that we are going to seek lower prices. And if you take a look at all these candles trading higher, we did not have any down close candles, so it is going to match the speed in which it has traded up to when it's trading lower. All right, same thing as this side here. So for this particular side of the, how would you put it, the sell side of the market maker buy model, right? You have consecutive down close candles without any up close candles. So when it traded higher to take out this high, look at the speed. So it's the same as when it comes down here, right? So we tag this order block low on Wednesday, and then it sells off. For NQ, it's slightly better on Tuesday. Alright, we traded into the fair value gap, and we tapped the bearish order block. This is the order block that formed the SMT with ES. Okay, so if you look on the higher time frames, NQ was the more bearish asset, as I've mentioned in the previous week's forecast video. Okay, so this would be the perfect shorting opportunity which ICT took, right? If you take a look at his latest execution videos, you would see that it is on the Thursday's high, and it lines up very nicely with the weekly fair value gaps, consequent encroachment right here. So this couldn't be any perfect, right? So moving on into the next week, I am looking to see if we have any bullish candles. For next week, keep in mind that we have CPI on Wednesday and then we have Thursday. So because I'm anticipating Thursday reversal profiles, we could want to produce or form a seek and destroy profile right here. And then we have this, we're probably going to have a fair value gap on the daily utilizing this candle. So I'm going to anticipate Thursday to trade up into that fair value gap and then drop it lower. Okay, so CPI is probably going to be the manipulation higher, unless they want to just drop it all the way down here by the end of next week, which is also possible. But for now, let's just keep it at bay and watch how price unfolds. All right, on over here we have this down close candle, this up close candle, which used to be a bullish breaker. So I am going to utilize this level again as my bearish order block, right? So this, I would call it the reclaimed bearish order block, right? If you take a look at the weekly, it is going to be this order block here, and for NQ, we're going to utilize the weekly fair value gap as an inversion. All right, so the weekly fair value gap is still the best in terms of, for NQ, right? Anyways, you would want to try to short NQ rather than ES, because NQ is the leadership in bearishness, and for NQ, the draw on liquidity, it's clearer as compared to ES, right? So NQ would be the better short into this relative equal lows. So we're going to use the weekly fair value gap. Weekly fair value gap would be this range here. Right. So trading up into the weekly fair value gap would be a good shorting opportunity to bring it down into these two lows down here and eventually down here. That is what I think is going to happen for next week and the subsequent week, right? Unless it wants to do something like crazy manipulation or something like that, like it runs up all the stops up here and then after that drop it lower. It is totally possible, but if it wants to do so, just have to wait, right? So yeah, that's my bias for next week. We are looking for lower prices, so we will be mainly focusing on shorts for the one shot one kill daily candle ranges or the weekly candle range. All right, now I want to touch on a little bit on the Nikkei. Let's see here. All right, so for the Nikkei, if you have watched my video where I talk about how you can just forecast crashes with charts only, this is where we are at right now, right? Initially I was using this chart here, the TVC chart for Nikkei. Where is it? Yeah, this one. I was using this chart here, right, as the gauge, but now that I realized that we have a futures contract for the Nikkei, I would prefer to use the futures contract, right, because it doesn't have too many gaps like what we have it right here. But anyways, nothing has been invalidated. Okay, we have traded up into the breaker, we have not traded above the breaker, so it is still a valid setup, right? Invalidation is right up here. This is the final invalidation, so we are still quite far away from it, and we have shown the willingness to displace lower. Let me just check if I put it across the order block, would we get the same result? Yeah, we would. So if you take a look at my at the model that I use, I wouldn't want to say that I created it because it's all from ICT, but this is a model that I always use, right? Utilizing the last order block, right? As you can see right here, 25%. Right, anyways, we will shift towards the futures chart, which would be slightly clearer, more clearer actually. Right, so over here, this is a, let me check, is it a down close or round close? Okay, right here. Right, so the model that I use is take a short entry between 0 and 0.25, 50% of the level. Your stops would be above the order block, and then you're going to look for discount prices. Okay, right here for this futures example, we don't really have a breaker, because if you really want to use a breaker, it's going to be this consecutive down close candles right here. Right, this would be the breaker, but because we have an order block that is very near to the entire range of the breaker, if you were to look at it this way, the order block is a much more refined entry, if you will, and at the same time we have taken out previous month's high with this candle, so everything is lining up very nicely. Right, so for Nikkei, same thing, the futures chart, we are looking for the lows down here, and if you look at the unfilled portion of this fair value gap, that is going to be the drawn liquidity. If you just want to use the fair value gap, then we would be looking for 50% of the fair value gap, and then eventually I want to see if we can trade below this lows right here, because this was the original consolidation that led to this high right here. So accumulation, reaccumulation, distribution, right? I mean, this is like I wouldn't say distribution, but more like a accumulation, and then after that your first distribution is this candle here, this move down here. This move will be part of the second distribution. All right, so the second distribution is going to run really fast. So let's see if we can do something with the USD JPY chart. All right, so over here you can see we've taken out previous month's high. We failed to take out this high, which is a good thing, because this high would sort of invalidate this entire range here, which means this could be your bullish order block, right? But we did not take out this high. We closed below these two up close candles that took out the previous month's high, and then this is the change in the state of delivery. So for the next day, we have formed this candle here. We closed all the way below this fair value gap. All right, so this is important. We closed below this fair value gap that was utilized to send the price higher into the rejection block and into this old fair value gap. Okay, so you don't want to see price closing above the consequent encroachment, which is what we have here. Look at how it respects this consequent encroachment. Okay, and then we dropped lower. So right now, this candle right here could be a potential bearish order block for the next week and the following weeks. If we close below this down close candle, this would be utilized as a inversion order block, which means this is going to be your bearish order block. Right, so because why? Because we have utilized this order block right down here. As this candle trades down into this order block, it has utilized this order block to send the price higher. So this will be your, if you want to call it the supply demand way or support resistance way, this would be your resistance if we manage to close below this candle. Okay, so this candle here closing below the 50% of this candle also validates the bearish price action and the bearish nature of the current order flow. All right, so let's take a look at USD JPY. So if you remember the chart, okay, I was looking for, ignore all this, I was looking for price to trade into this fair value gap. The same theory applies. Okay, same theory. Look at the high, look at the high, and then we dropped lower, closing below this order block here. if you were to highlight the range, traded into 25%, and then we drop it again, because by this time we are closing below this candle, this down close candle. And notice how we have utilized this down close candle before. Right here, can you see this green candle touching the high? So these two down close candles will become your inverse bullish order block, which means it's going to be bearish when we close below it. So right here, we closed below, price came back up into this order block. Look at the opening price, I mean the closing price. The precision is unmatched. Okay, and the other thing is that it also has another layer, which is this inverse bearish fair value gap right here, right? So everything falls in line, and then right now we're looking at these lows and this low right here, and maybe eventually we would like to get down into this level here. So what is that level? If you look at the monthly chart, this is your original consolidation that led to this high, right? So let's zoom out. This is what we have. We've taken out this high, we left equal highs though. So let's see what it wants to do, but it's going to seek discount from this low to this high, because this low right here is the last stop hunt. Right here. Okay, with this, I think I've pretty much covered everything that I want to cover. Right, so let me just double check, scan through, see if there is anything I missed out. Right, there's nothing else, I think. And let me just go through another example of my model right here, of the model that I'm using. Okay, it's not mine, but the model that I'm using. So we have, right, so let's just say you failed to capture all this move down here. What could you do on the lower time frames? Okay, so over here you can see that on the 50 minutes, always use the 50 minutes as your narrative and context building, because I think it's the lowest that you should go for narrative. Okay, so right here we have this green up close candle taking out this swing high, short-term high. On Nasdaq, this green candle has traded up into this bearish order block. Why is this a bearish order block? This was the candle that has traded into a fair value gap, and then it sends the price lower to take out this swing low. So this is a valid bullish order block. Look at how the price are respecting it. Okay, if I were to use the fibs, same thing here. Okay, so right here it has shown really bearish nature or behavior, because it wasn't able to trade into the 50%, nor was it even able to trade into the 25%. So it's telling you that we are heavy, we're really heavy, right? After all this drop, and we're still heavy. So look for shorts. What is the shorting criteria, right? After we have traded up into this level here, you wait and see this level here, whether it is disrespected or not. This is a bullish fair value gap, right? So if it is going to be bearish, you want to see a closing price below this bearish fair value gap. And if you're to compare the two assets, ES is weaker. and because ES is weaker, you would want to take shorts on ES. So what does ES have? Right, this tiny little fair value gap here as well. Right, as you can see, this candle has closed below. So you go down into the 5 minutes time frame. Right, so at this part of, during this time here, we are in the PM session. I am going to mark out the 130. So after 130 is when you start to look for your setups. Right, so at 130 we have the candles closing below this bearish outclose candle that has traded into a premium similar to NQ. Right, this right here is a swing high. We've taken out this swing high for NQ and for ES. We closed below this order block, and then we formed a fair value gap. We have also traded below this inefficiency. This should be a bullish fair value gap, right? And then if you take a look at the 1 minute, this would be the low that you'll be targeting for ES. Right. So over here you can see you have a better picture of what the market's trying to do. Okay, so after 3:30 you still have to wait. Even though you're looking for setups, you still have to wait, because for me, I believe in trading the PM silver bullet session, which is 2 PM onwards, 2 PM to 3 PM. Okay, so at 2 PM right here, we have price trading up and taking out this swing high here. This is an inversion fair value gap. Right, let's draw it on the 1 minute. 1 minute inversion fair value gap that sent the price higher to take out this swing high. So same thing here, we have closed below the inversion fair value gap. So you don't want to see any body candles closing above the 50% of this inverse fair value gap. Okay, so we have price taking out this swing high, and then we traded lower, closing below this small little fair value gap inefficiency on the 1 minute. Right, at 2 PM we traded back into this inverse fair value gap, and that is when you take your short. If you take a look at the 15 seconds chart, it is trading up into this inefficiency here at after 2 PM. Right here. So you notice how we have taken out this swing high with this high, correct? And it has shifted bearish down here with this swing high stabbing into the rejection block right here. So the stops is right here, and you'll be shorting after 2 PM, which would be probably here and here. So your stops is above here, this swing high, right? So for swing highs that have attacked the rejection blocks and then they shift to the other direction, those swing highs are usually safe. Like high probability it's going to be safe. So this is one example here. So my orders were around this area. I forgot, I took it on the top step account, right? And my stops was here. I'm not too sure if you can, let me see if I can trace back the orders. Where is it? Because top steps don't have the execution arrows, or does it have it? let me double check. Settings. Yeah, you can't see the executions. Okay, but never mind. Believe it or not, it doesn't matter to me, right? It's the model that I'm trying to showcase. Okay, how you can take it from the high time frames to the low time frames, similar to how you can use it on the daily time frames as well. Okay, so right here, shorts down, we're looking for the sell side right down here. It's not the prettiest, it's not the low resistance liquidity runs. It's more like a chop, because we have moved a lot during the AM session, right? So as you watch the price pan out, right here you would be able to notice SMT on the highs with ES and NQ, and then we traded below this down close candle. So at this point in time, I shift my stops to this swing high because I don't want to see an SMT on the highs to be taken out if I am bullish. I mean, if I'm bearish, and price has already confirmed this consecutive up close candles as the bearish order block. Therefore, I wouldn't want to see it trade up here, because if it trades up here, that means it is going to stall for a longer period of time before getting to the objective. So right here, my entries are right above here. So shifting it all the way down here, it's I wouldn't say break even, but more like a stop loss in profits. Okay, stops to profits, right? But yeah, this is what happened, and eventually we did not trade up into this high. We went up all the way back into this level again, this old fair value gap, similar to how it did right here, and then we dropped into the final objective. Right, so how can you utilize this on the daily time frames? It's very simple as well. Okay, let's use NQ, right? Okay, maybe not NQ. Let's just use ES, because NQ you can just look at it on ICT's most recent execution videos. So for ES, how could you have utilized this level here? Right, so on Wednesday, we traded higher into this order block, right? And then you drop down into the 15 minutes chart. For daily PD arrays and weekly PD arrays, I find it the most efficient to just use the 15 minutes charts as your entries. And if you want to refine it further, you can use it. You can drop to the 5 minutes or even the 1 minute time frame during the particular session itself, right? So it all depends on you. How much would you like to refine your orders or your entries? If you're not too keen on doing like very tight stop losses, then you don't have to drop down into the low time frames. Okay, so on the 15 minutes, we have this candle here after 10 p.m. 10 p.m. we have a news driver, and then we traded up into the bearish daily order block. We dropped and we closed below this consecutive up close candles for the 50 minutes. Right, we closed below at this candle here, 12 o'clock. Notice how we have left this two equal lows. This is 10 a.m.'s low, and this low right here. This is my target, potential target. Terminus obviously would be this lows here, but this would be your low hanging fruit objective. Right, we traded higher into this fair value gap. So let me just mark out the fair value gap, and then we drop lower into the 5 minutes. Right, so remember, it's the it's lunchtime, correct? So you would much prefer to utilize the 1250 to 110 macro. So we have this candle here, 1230, 1245, 1240, at 1240, right? We see that we have a change in the state of delivery after trading into a bearish 15 minutes fair value gap, and then you refine. This would be your order block right now, because we have closed below at this candle here at 1240. 1245 we created this fair value gap, and then 1250 we trade up into the fair value gap. If you were to use the fair value gaps range, 50%. If you were to really want to have your perfect entry, inversion fair value gap right here, right? So let's drop into the 1 minute time frame. So on a 1 minute time frame, we have this candle, these two candles trading into the bearish 5 minutes fair value gap, right? I hope you're staying with me because I don't have all the annotations, because it would have been too messy. Right now, so over here we dropped lower, we did not close below, so this is not a validation for shorts yet, right? And then you see this very next candle higher. Look at NQ right here. You have S&P. Knowing that ES is the more bearish asset, I mean, in terms of the current trend, I'm not looking at the higher time frames, I'm looking at the current trend. Alright, if you were to compare which one has moved lower, it's obviously ES. Okay, so right here you have S&P on highs. You would like to short the weaker asset. So we traded below this swing low here on this candle with the S&P high. You use the order block of the higher high. Notice how we close below, right? So your orders will be here 50% on between 0 and 0.25. Your second entry will be here at 50%, and your stops will be down here. I wouldn't recommend adding here, but unless you're really convinced that it's gonna go lower, then you can add one more here. But usually I stop at the 50%. Okay, and then we dropped lower. It's a high resistance liquidity run, right? But you can see that the thing works because it didn't trade up into this invalidation here. This is the invalidation, the high of the order block, right? You can use this high as well if you really want a very tight stop, just as how I described before. If you have like a swing high that has purged a rejection block, that swing high, after a change in the state of delivery, that swing high is going to be safe for stops. Right here, it has proved to be so as well. Okay, if you want, you can use this as well. This is also possible. Okay, now we dropped lower, and then eventually we drifted into 10 a.m.'s low. Right, this is not a very clean price action as well. A lot of back and forth, right? And that's how you would utilize it on the low time frames using high time frame PD arrays. Right, okay, so with this I'll end the session here. It has been 30 minutes. Wow, okay, time to stop. Right, and with this I'll end the video here. Hope you enjoyed it, and I will talk to you again. Hope you find this insightful. If you do, like, and if you have any questions, comment, leave the comments, leave it in the comment section down below. That's it, signing out.